Welcome back to Investing Talk Podcast. You know, when it comes to investing, some people just seem to have a knack for it. And today we are going to talk about one of those people, Nancy Pelosi.
Interesting.
Yeah, she's built a very impressive track record. And we are going to try to decode her strategy a little bit today by taking a look at her top 5 holdings.
So we are going to learn from the best.
Exactly. Learn from the best. Instead of chasing the latest trends or whatever, we are going to see what a very, very seasoned investor like Pelosi is betting on.
For the long term.
For the long haul.
Exactly. Okay, I'm excited.
So let's jump right in.
Yeah, let's do it.
Her top holding is Alphabet. Ticker symbol GOOGL.
Alphabet.
Alphabet. Yeah, now everyone knows Google, right?
Of course.
Search maps, YouTube, it's everywhere. But what really struck me is how much they dominate the digital ad market. We are not just talking about being a big player. They're practically calling the shots. How do they manage that?
Well, it's a combination of factors. First, they have an unparalleled amount of data on user behavior. I mean, think about it. Every search you make, every video you watch,
all going in.
It all feeds into their algorithms, and that allows them to target ads with incredible precision. And then second, their sheer scale gives them a huge advantage. They can offer advertisers reach and impact that few others can match.
That makes sense. But, you know, it's not just ads, right?
No, it's not just ads.
They're also making big moves in cloud computing with Google Cloud. And aiming for a combined annual revenue of over $100 billion for cloud and YouTube by the end of next year.
Wow.
That's pretty ambitious.
Definitely ambitious. And they are betting big on AI to drive that growth.
Oh, really?
Yeah. Google Cloud is integrating AI into everything from data analytics to security.
Interesting.
Making it very attractive for businesses who want to leverage the power of AI.
Yeah, well, AI is so hot right now.
It is.
It's everywhere.
And let's not forget YouTube's potential. I mean, they're constantly innovating from streaming to shopping features, and their global reach is massive. This multi-pronged approach is likely why Pelosi sees long-term value in Alphabet and even acquired more call options in January.
Oh, wow.
Yeah.
So she's really doubling down.
Yeah.
So it's not just their current market share, but it's this strategic use of AI and this constant innovation that makes them a really good long-term bet.
Precisely. They're not just riding the current wave, they are shaping the future of the digital landscape.
Wow, that's amazing.
Yeah.
All right, next up is a company that needs no introduction. Amazon, ticker symbol AMZN.
Amazon.
I mean, who doesn't use Amazon these days?
Yeah, come on.
But what's really fascinating is their relentless revenue growth. We are talking about a typical growth rate of around 30% year over year.
Every year.
How is that even sustainable?
Well, that's the million-dollar question. While their e-commerce business is massive. Amazon isn't content with just that. They've cleverly diversified into other areas.
Like what?
Most notably with Amazon Web Services, or AWS.
Oh, yeah, AWS.
AWS is the backbone of the internet, providing cloud computing services to countless businesses worldwide.
So they are everywhere.
This dominance in cloud computing significantly boosts their valuation and provides a steady revenue stream.
That makes sense.
Beyond online shopping.
I've heard AWS described as a cash cow.
And I can see why.
Yeah, and I can see why. But there's always this talk about Amazon's PE ratio being misleading. Can you break that down for us a little?
Sure. Amazon's PE ratio, or price-to-earnings ratio, often seems high because they're constantly reinvesting profits back into the business. They're focused on long-term growth, not just short-term profits. So instead of getting hung up on the PE ratio, it's smarter to look at their cash flow. And last year, their operational cash flow hit a staggering $71.6 billion.
Wow.
That's a clear indicator of their ability to generate cash, and it's likely a key factor behind Pelosi's decision to purchase call options on Amazon earlier this year.
Interesting. So while the high PE ratio might scare off some investors, Pelosi sees the bigger picture. The potential for those massive future earnings.
She's looking at the long game, understanding that Amazon's aggressive reinvestment strategy is setting them up for sustained growth.
So she is playing chess, not checkers.
Absolutely.
All right, let's move on to the next one. This is the tech giant that just keeps on evolving. Microsoft, ticker symbol MSFT.
Microsoft.
They've made a really remarkable comeback in recent years, especially with their move to the cloud.
Absolutely. Microsoft realized early on that the future was in cloud computing, and they've been laser-focused on transitioning their business model.
And it's paid off.
It has paid off handsomely.
Their cloud platform, Azure, now a major competitor to Amazon Web Services. And they are going head-to-head in this rapidly growing market. I even saw some projections saying Microsoft stock could reach $575 by 2025.
Wow.
What's driving this optimism?
It's their commitment to innovation and a multifaceted approach.
Okay.
They're not putting all their eggs in one basket.
Right.
They're pouring resources into research and development, expanding their global reach, and staying ahead of the curve in key tech sectors.
Okay.
This creates a powerful formula for sustainable growth.
That makes sense.
They're not just a software company anymore.
Right.
They're a major player in cloud computing, gaming, AI, which positions them very well for the future.
So they are diversifying their portfolio, much like Pelosi herself.
Yeah, an interesting parallel.
Interesting parallel. All right, speaking of diversification, this next company on Pelosi's list is a bit different.
Okay, I'm interested.
Nvidia, ticker symbol NVDA.
Nvidia.
They're not a household name like the others, but they are a force to be reckoned with in the tech world.
Nvidia is the king of GPUs.
GPUs?
Or graphics processing units.
Okay.
Originally known for powering high-end gaming. Their chips are now essential for AI data centers and all sorts of cutting-edge technologies.
So their stock performance kind of reflects this. Nvidia's revenue has skyrocketed, a 94% growth year over year.
94%.
That's incredible.
It's incredible. And it's the AI revolution.
The AI revolution.
As AI becomes more sophisticated, it demands increasingly powerful hardware. And that's where Nvidia's GPUs shine.
Interesting.
They're the brains behind many of the AI applications we see today.
Like what?
From self-driving cars to medical diagnoses.
Wow.
This puts Nvidia in a prime position to capitalize on the continued growth of AI, which is projected to be a multi-trillion-dollar market in the coming years.
Wow. So Nvidia's riding the AI wave?
Oh, yeah.
But are they just relying on current trends, or are they looking ahead in the future?
They are looking ahead. They're already laying the groundwork for future growth with some exciting new product launches on the horizon.
Like what?
For example, their Blackwell architecture is expected to revolutionize GPU performance, which will further solidify their position in AI and other high-performance computing sectors.
So they are anticipating those future demands.
Absolutely.
Which is so crucial.
Innovation is key to staying ahead in a rapidly evolving tech landscape.
Right. But, they're also aware of the potential challenges.
There are always challenges.
Like what?
Well, like any company reliant on complex supply chains, Nvidia is susceptible to disruptions.
Okay.
Geopolitical events, natural disasters, even a pandemic could impact their production and delivery.
Oh, yeah.
And of course, competition is always a factor.
Right.
Intel and AMD are formidable rivals, constantly pushing to close the gap in GPU technology.
So while their future looks bright, they are not taking anything for granted.
Exactly. There are always risks to consider, but NVIDIA's focus on innovation and their strategic positioning in a rapidly growing market makes them a company to watch.
Absolutely. All right, so we've got 4 down and 1 to go.
Okay, let's do it.
This one is a bit of a wild card.
Oh, really?
It's Tempus AI.
Tempus AI.
Ticker symbol TEM. This one's a little different compared to the tech giants we've been discussing.
Yeah, how so?
They're a relatively new player in the healthcare technology sector.
Interesting.
What caught my eye is their use of AI, but in a completely different way than Nvidia.
Okay, so how are they using AI?
Well, I will let you tell me.
Okay.
Because you're the expert here.
All right, well, what Tempus is doing is really fascinating. They're using AI to revolutionize healthcare diagnostics.
Okay.
Instead of powering hardware, their AI analyzes vast amounts of patient data.
Interesting.
Think medical records, genomic profiles, even images.
Wow.
To help doctors make faster and more accurate diagnoses.
That's amazing.
Especially in complex fields like oncology, cardiology, and radiology.
So they are bringing the power of AI to the front lines of healthcare.
That's a great way to put it.
Yeah, and their revenue growth is nothing to sneeze at either.
Yeah.
A 65.85% jump in 2023.
Wow, that's huge.
Yeah. So what's your take on their future prospects? Can they keep up this momentum?
Well, Tempus is tapping into a massive market precision medicine.
Okay.
This personalized approach to healthcare tailored to an individual's unique genetic makeup and medical history.
Yeah.
This is the future of medicine, and Tempus is at the forefront of this revolution.
Wow.
They've already secured strategic partnerships with major hospitals and research institutions, and their innovative technology is attracting a lot of attention.
But they are not profitable yet, right?
That's true. They're still in the growth phase, investing heavily in research and development,
Right.
which is typical for a company like this.
Right.
The real question is, can they translate their impressive technology and partnerships into sustainable profits?
Okay.
Their upcoming earnings announcement will be crucial for gauging their progress.
Mm-hmm.
Analysts will be scrutinizing everything,
What will they be looking for?
from their customer acquisition rate to any updates on their partnerships and technological advancements.
So a lot is riding on this upcoming announcement.
It'll be interesting to see how it unfolds.
Yeah, absolutely. As we've been talking about these companies, I'm struck by how Nancy Pelosi seems to be focusing on those that are not just riding trends,
Right.
but actually shaping the future,
Mm-hmm.
whether it's through AI cloud computing or revolutionary healthcare technology.
It's a very astute observation, you're right. She's not just chasing short-term gains, she's identifying companies that have the potential to dominate their respective industries for years to come.
Yeah,
But remember, even the savviest investors can't predict the future with 100% certainty.
right.
There are always risks involved, and it's crucial to do your own research before making any investment decisions.
That is such a good point you bring up because we can learn from Pelosi's approach, but it's so important to remember that every investor has different goals,
Absolutely.
risk tolerances,
Mm-hmm.
financial situations.
For sure.
What works for one person may not be suitable for another.
Exactly. Blindly following someone else's portfolio, even someone as successful as Nancy Pelosi, is never a good idea.
Yeah.
It's about understanding the underlying principles,
Right.
analyzing the companies and making informed decisions that align with your own financial objectives.
So it's more about learning from her strategies, not just copying her trades.
You got it.
Okay, well, let's take a quick break.
All right.
And when we come back, we'll continue our discussion of Nancy Pelosi's top holdings and what we can learn from her investment approach.
Sounds good.
All right, welcome back to Investing Talk Podcast. We are talking about Nancy Pelosi's top 5 stock holding and what we can learn from her investment approach.
Yeah, this has been fascinating so far.
So one thing that really stands out to me is the importance of diversification.
Mm-hmm.
Pelosi's top 5 holdings represent a variety of sectors and approaches to technology.
Right.
It's not just about putting all your eggs in one basket.
No diversification is a cornerstone of any sound investment strategy.
Right.
It helps to mitigate risk by spreading your investments across different industries and asset classes.
Right, so that way if one sector underperforms, it won't completely tank your whole portfolio.
Exactly, and Pelosi clearly understands this.
Okay, so let's shift gears a little bit and talk about some of the specific trends that we've been kind of touching on.
Okay.
And one that keeps popping up is AI.
AI.
It seems like it's transforming everything.
It really is.
From healthcare to how companies like Google target ads.
Yeah.
So what are your thoughts on the long-term impact of AI?
I mean, some people are very excited about it.
Right.
Other people are concerned about job displacement and things like that.
For sure.
Well, AI is undoubtedly one of the most transformative technologies of our time, and its impact will be felt across all sectors of the economy.
I think we are seeing that already.
Yeah, absolutely. And while it's true that some jobs will be automated, AI will also create new opportunities in industries that we can't even imagine yet.
So it's not just about jobs being lost.
Right.
It's about jobs evolving and new jobs being created.
Precisely. The key is to be adaptable and embrace lifelong learning.
Yes.
Developing skills in areas like data analysis, software development, and AI itself, those will be crucial for staying relevant in the future job market.
But it's not just about technical skills, right?
No, it's not just about the hard skills.
Okay.
Human skills like critical thinking, creativity, and emotional intelligence, those will become even more valuable as AI takes on more routine tasks.
So it's about investing in yourself as well as investing in the stock market.
Exactly. The future belongs to those who are willing to adapt, learn, and embrace the changes that AI will bring. And that's a valuable lesson we can all take from Nancy Pelosi's approach to investing.
Right.
She's not just reacting to the market, she's anticipating the future and positioning herself accordingly.
It's easy to get caught up in the day-to-day fluctuations of the stock market.
Right.
But taking a long-term perspective like Pelosi seems to do is key.
Absolutely.
Instead of chasing quick profits, she's identifying companies that are solving big problems and have the potential to reshape the world.
It's a much more strategic approach, and it can be very rewarding in the long run.
For sure. But remember, investing is a marathon, not a sprint. It requires patience, research, and a willingness to ride out the inevitable ups and downs of the market.
You got it.
And speaking of patience, Amazon's approach to their PE ratio is a great example of this.
Yeah.
They're willing to take a hit on short-term profits to reinvest in their long-term growth, and it's clearly paying off.
Absolutely. Amazon's success is a testament to the power of long-term thinking and a relentless focus on innovation.
Right.
They're constantly experimenting, expanding into new markets, and pushing the boundaries of what's possible.
And that's something that all investors can learn from.
For sure.
Okay, so we are going to wrap up this part of our look into Nancy Pelosi's investing strategy.
Okay.
But when we come back, we will continue to break down her top holdings and discuss what lessons we can glean from her approach.
Sounds good.
All right, welcome back to Investing Talk Podcast. We've been discussing Nancy Pelosi's top 5 stock holdings and what we can learn from her investment approach.
It's been a fascinating look into her strategy.
You know, one thing that really stands out to me is that she really seems to understand the power of AI.
Yeah, absolutely. I mean, we see it in several of her top holdings.
Like Alphabet and Nvidia?
Exactly. Those companies are really at the forefront of AI innovation, and they are well positioned to benefit from the continued growth of this transformative technology.
And it's not just about the technology itself. It's about the companies that are really using AI to solve big problems and create new opportunities.
That's a key point. I mean, AI is not just a buzzword. It's a tool that can be used to address some of the world's most pressing challenges.
So for investors, it's important to look beyond the hype and identify the companies that are really using AI to make a real difference.
Right. It's about finding the companies that are not just talking about AI, but actually implementing it in meaningful ways.
Okay, so we've talked a lot about the individual companies in Glossy's portfolio, but I think it's also important to step back and look at the bigger picture.
Yeah, what are the overall trends and themes that we can glean from her investment choices?
Well, one thing that's clear is that she's not afraid to invest in companies that are disrupting traditional industries.
It's right. She's clearly comfortable with a certain level of risk, and she's willing to bet on companies that are challenging the status quo.
And she's also not afraid to invest in companies that are still in the early stages of growth.
Yeah, she's not just looking for companies that are already profitable. She's looking for companies that have the potential to become much bigger in the future.
So it's a mix of established players and up-and-coming disruptors.
Exactly. And I think that's a smart approach because it allows her to diversify her portfolio and capture growth across a range of different sectors.
Okay, so what are some key takeaways for our listeners who are maybe looking to apply some of these lessons to their own investment strategies?
Well, I think the biggest takeaway is that successful investing is not just about picking stocks. It's about having a well-defined strategy and doing your research.
Yeah, you need to understand the companies you're investing in.
Absolutely. You need to know their business model, their financials, their competitive landscape.
And you need to be comfortable with the level of risk you're taking on.
Exactly. And it's important to remember that there's no one-size-fits-all approach to investing. What works for one person may not work for another.
So it's all about finding an approach that aligns with your own individual goals and risk tolerance.
Right. And it's also important to stay informed about the market and the economy so you can make informed decisions.
Okay, so final thoughts. What can our listeners do to become more informed and more confident investors?
Well, there are a lot of great resources available online and in libraries.
Like what?
You can find books, articles, websites that provide information on investing, personal finance, and the economy.
Yeah, and there are also a lot of great financial advisors out there who can provide personalized guidance.
But ultimately, the best way to become a more informed investor is to simply start learning and start investing.
You've got to jump in and get your feet wet.
Exactly. The more you learn and the more experience you gain, the more confident you'll become as an investor.
Well said. Well, we've covered a lot of ground today. We talked about Nancy Pelosi's impressive track record and her top 5 holdings. We explored the strategies behind her choices, and we discussed some key trends that are shaping the investment landscape.
It's been a great conversation.
We hope you found this episode of Investing Talk Podcast informative and insightful. If you did, please subscribe to our channel and leave us a comment below. We'd love to hear your thoughts. Thanks for listening.